Hi, this is Dr. John Rogers, and welcome to this week's episode of the Financial Independence Podcast. Every year, the cost of healthcare services increases faster than the cost of living, and this is the reason why health insurance is so expensive. Nevertheless, as expensive as it is, you need to have health coverage because an unexpected catastrophic illness or a bad accident could easily either wipe out a family's lifetime savings or, at worst, bankrupt a family. Given the need for health insurance, it is important for you to understand how to obtain insurance coverage that best suits your needs and your budget. You must always keep in mind that the aim of the insurance company is to collect as much money as they can from you in premiums and pay out the least amount in benefits. Of course, this means that your aim is to pay the least amount of premiums and get the maximum amount of coverage. In this podcast, I will explain four things: some basic health insurance terminology, what determines the cost of your health insurance premiums, how to lower the cost of your premiums, and lastly, how to not be tricked into buying any add-on features like maternity and dental coverage. So first, the terminology. The health premium is a sum of money that you must pay to the insurance company on a monthly basis for your insurance coverage. The deductible is the out-of-pocket expense that you have to meet for, say, a doctor's visit or for surgery. For example, if the cost of surgery is $5,000 and your deductible is $500, then you'll have to pay $500, and then the insurance company will pay the remainder minus any co-payments. All health insurance policies include a co-payment. The co-payment is the amount of money that you have to pay out of pocket in addition to the deductible before the insurance company kicks in. Let's say your medical bill is $20,000 and your deductible is $500 and your copay is 20% of the first $5,000. In this case, you'll have to pay the $500 deductible plus the copay, which would be 20% of $5,000 or $1,000, for a total of $1,500. The insurance company will be responsible for the remainder. If your lifetime co-payment limit was, say, $50,000, then you'd have to continue to make co-payments on all of your medical bills up to the $50,000 limit. The insurance benefits are the amounts of money that the insurance company pays out to cover the cost of your medical bills, net of your deductible and co-payments. However, there is a limit as to how much the insurance company will pay out for any given policy, which is referred to as the lifetime maximum. In most cases, this is $1 million. Now that you are familiar with the basic insurance jargon, I'll explain what factors determine the cost of the premiums. Your age is the major determinant. The older you are, the more likely you are to become ill, and thus the reason for the higher premiums as you become older. Individual or family policies are more costly than group policies, but in both cases, the cost of the premium is determined by the age of the oldest individual in a group policy or the age of the oldest spouse in the case of a family policy. The cost is also determined by an individual's state of health. Healthy individuals who are not hypertensive, diabetic, have elevated cholesterol, or cancer will have lower premiums than those afflicted with these conditions. Premiums for individuals who have children are not impacted by the age of the children up to the age of 18 years. Premiums for women who are of childbearing age and are desirous of having children are higher than for men of comparable age. In general, the premiums for group and individual plans are higher in countries in which there's very little competition in the health insurance market. For example, health insurance in the Caribbean is much higher than in the United States. Premiums also higher when you buy a policy from an insurance company that has an A and M credit rating below A. So here's how you can lower your healthcare premiums. The first thing is to buy a policy with a high deductible. Remember, what you really need insurance coverage for are the big medical bills, say associated with major surgery, and not so much for smaller bills like those related to a doctor's visit. Therefore, whilst having a low deductible will cover your smaller healthcare cost, on balance, over the life of the policy, you pay out to the insurance company far more money in higher premiums associated with a low deductible plan than you would pay out on smaller healthcare costs if you have a high deductible plan. So if you have a high deductible plan, you can reduce your premiums by up to 40%. This will result in a high savings over the lifetime of the policy. You can also save money by agreeing to pay a higher percentage of the co-payment, because this will reduce the annual premiums paid. So in the example given above, if instead of paying 20% of the first $5,000 of a medical bill, you pay 80%, then you'd pay a lower annual premium. You should only buy health insurance from an insurance company that has the lowest premium, but still has an A and M rating of A or above. If you buy a policy from a company with a lower rating than A, there is a greater risk of such a company going out of business, which means that you would have paid years of premiums in vain and would be left high and dry without any coverage when you most need it. The next thing is not to buy maternity insurance. The reason for this is that you end up paying as much in premiums as you would end up paying for maternity expenses out of pocket. The reason for this is that maternity benefits premiums are grossly overpriced, and thus at the end of the day, you end up paying more in premiums than you can claim in benefits. Indeed, this is why insurance companies place a limit on the maximum benefit that can be paid out on a maternity insurance claim. For example, in order to prevent women from making a claim before they have paid premiums equal to the maximum benefits that the insurance company would have to pay out at the time of delivery, insurance companies make women wait a period of 9 months to 1 year before any maternity benefits can be claimed. So the premiums paid will be equal to or more than the maternity benefits claimed. To boot, if you don't have a child for several years, then you would have paid out far more in claims than you would have received in benefits. Finally, many insurance companies will try and entice you into buying some additional life insurance as part of your health insurance policy. This is just another deceptive practice the insurance companies employ to increase the amount of premium payments. In most cases, you will already have life insurance, so you should request that your insurance agent unbundle any type of life insurance from your premium health insurance policy. If you follow these simple health insurance tips, then you'll be able to save thousands of dollars, which you can use to invest in other assets, all of which will help you to become financially independent and meet your financial goals. So thanks for listening. And if you are interested in becoming more financially independent, then please feel free to sign up to this channel.